All right, good morning, members. It's September 25th, so weekly review. Take a look at what happened, what we expect to happen, and just where things are and how we trade them. We've had a good run. We continue to have a good run. The market continues to do the same. Russell was up 2.5%, a little over 1% on the S&P and the NASDAQ, a little bit less on the Dow, bringing the yearly totals up to respectable numbers again. The most important thing last week is that this market held, right, and the bounce continued. And so, we had to set up for the bounce. The bounce took place. And then once it took place, it continued. And that's always a critical thing when you're looking at these markets. And so, as a result, what happens is the bears end up on the ropes again. So starting with the strongest indexes that we have, to get a feel for, the fact that the bears are on the ropes. The NASDAQ, the NDX in particular, Apple in particular inside the NDX was what kept this thing alive and had us push forward. A little bit of a pause here on the swing point highs. You finally break over it. That's the green arrow. In other words, we had enough volume when we broke over. And you get the extension the next day. Now a little bit of a retrace on Friday. What is it trying to do? Well, if anything, it's trying to come back in and do a bullish retest regen off these prior swing point highs. And so you have this highest one here. If it comes back into it, you would expect, the probabilities are reasonably high. It's better than a coin flip, 60% or so, that it's going to try and regenerate back to the top side. And the fact that it pushed higher gives it enough room to come back and then regenerate. So as we come back, volume shrinking a little bit. Everything looks fine. You got 3 swing point highs you broke over. That looks to try and push higher. That's the NDX. Now that was the strongest of the group. But we had the same thing, if you remember, happen on the NASDAQ. NASDAQ gets over the high, now coming back trying to do the exact same thing. This past week, the Russell confirmed the same thing. Now, the Russell, unlike the others, didn't get the extension. So the Russell's coming back on an immediate retest regen, and it's just a little bit lower the bottom, and that's where the support zone is that you see, and a prior high in front of that got broken down here. So as we come back, you're going to want, ideally, to see the Russell hold on this regenerate. You wouldn't want to see it, for example, get back underneath this low. And so this will be the test this week, is to see if the Russell, in fact, regenerates and pushes higher. Finally, moving to the weakest of the group, that's the S&P 500. Now, the S&P 500 hasn't even got back to the highs yet. What it did do, though, it did a couple things that tell us that more than likely it's going to try and push higher. The first is it did this retest regen on the bearish side, got over it. Of course, it did come back in it. What you would like to see is a couple bars that stay above it. Didn't quite get it. The other piece is that when it came back into this, that prior breakdown bar, which was here, right, it got back underneath it. So if there's a little bit of a hope for the bears, it's this, and that is that this continues to push down, right, and this ends up being a failed breakout. In other words, the bearish retest regenerate actually does begin to regenerate. Odds are not good for that, though. Odds are is that you're going to get some sort of a pushback, and then again it's going to attack it, try to get over it, and more than likely do so. That's usually the way this works out. When it gets over it, and over it, I'm talking about the bearish retest regen. Typically, when you get over it here, even if you come back inside of it, you're usually going to come back and try it again, and push again. So odds are high that, especially given the other 3 indexes, that in fact that's what we're going to see take place. And so when I say the bears are on the ropes, that's what I'm speaking of. The fact that the Russell, the NASDAQ, the NDX have already broken out. The S&P, to me, just looks like a matter of time. Now, the other big piece of what's happening here is bond yields are actually coming down as well. So if I pop over to like the TLT, right, we can see the TLT is pushed higher. Now, just like the S&P, just like the Russell, right, it's not out of the woods yet. In other words, you got a bearish retest regenerate up here. So it goes into that area, right? And on Friday actually does an over-under after a nice push up. I wouldn't be surprised to see this come back to this area before it again tries to set up another move to the top side and get deeper into this bearish retest region. So far, this is doing exactly what you would expect, and that is that after more than 6 bars, right? So we get under here, we go more than 6 bars. Now we get the push. The first push should only get us about a third of the way deep at most into this. That's the general thesis that you can live off of. So more than a third of the way, would say, hey, this is stronger than we think. Well, so far it hasn't done that. As a matter of fact, with the low over under, looks like it's going to try to push back down. So you push up, you fell, you bearishly try to regenerate to the downside. But I'm expecting that as it comes back into these 2 bars, it's going to flip right back around and try to go back to the top side. That will be something we need to be watching. The other item is the yen. And what we've been watching on the yen is whether or not it would bearishly retest and regenerate to the downside. So, how I just said that usually after more than 6 bars, and this is on a monthly basis that we're looking at here, but it's way more than 6 bars. After more than 6 bars, typically you should only expect it to get about a third of the way deep on the first push back into this area. Well, not only did it get back into it, right, it pushed right to the very top. And it's done it 3 weeks in a row now, or 3 months in a row. And so the question really remains is this going to break higher, or is it going to finally regenerate back to the downside? One thing that looks certain to me is that on a longer term basis, this is probably putting in some sort of a bottom. So in other words, the yen is not, it doesn't appear to me that the yen is actually going to drop to new lows anytime soon, or even in the longer term. Looks like it's turning. If the yen is turning, that's going to put pressure on equities in Japan, and typically in the past, it has put pressure on equities everywhere, not just Japan. And so if this really is a turn, and if we get some sort of a retrace down into here and it finds support maybe in this area and then pushes back up and breaks out, that on a monthly basis is probably not going to be good for equities worldwide. So it's just something to keep in mind. Unless it breaks over now, it's probably delayed. So that's, again, I think that's something we have to keep in our back pocket, and we continue to monitor and revisit it as time suggests that we do so. So that, to me, are the biggest positives that are taking place. We've also got some things outside of these in areas that we haven't seen good participation by the market participants in some time, and those things are starting to look positive. In particular, if we look over at the biotechnology, we'll see it there. So I'm going to go to the IBB. And if we look at the IBB got over the breakdown bar here, the big push down off those prior highs, got over it, closed over it, did come back into it, a little 2-bar reversal, looks like to me. So I would expect that tomorrow this is going to trade down or at least sideways. But then remember, we have the presidential debate, and so much of the pressure that's been on this group has been off of Clinton. If she does poorly, we may see this get the little push down and then set up some sort of a large ABCD structure to the top side. And on a short-term basis, that's one of the trading ideas, or actually the trading idea that I highlight this week, is that we may see more strength come into this sector. Another one that's actually looking pretty good is the transports. If we push over to the transports so far, a big sideways trend. If you pull this back, this looks like it's getting ready to try to break higher. Now, transports have lagged the rest of the indexes for forever. And if this actually does break higher, and it looks like it's going to give it a try, then we might finally be seeing something bigger. If you go back to like Dow theory, right, we might be seeing something bigger starting to transpire here, where we actually get something to the upside that may stick for a while. And so the transports is another area that I think is showing some positive signs where we haven't seen them for some period of time. If we look at what's weak, that's the financials. The financials, and Wells Fargo being a huge piece of this, the financials have been struggling as a result of Wells Fargo and the spotlight, again, that's being put on these stocks in the large cap financials. They've had so many issues, and they continue to have issues. And it didn't help that the Federal Reserve didn't raise rates in terms of these stocks, and with the spotlight on Wells Fargo and the pushing people to open many accounts with Wells Fargo, the Senate hearings that took place last week, et cetera, this group has been struggling. But the thing I want to show you, and here's the weekly on it, it's not terrible the way this thing is set up, but what I want to show you is that it's not everywhere. So if I go, for example, pull up, let's pull up the KBE, for example. So this is smaller cap banks. This chart looks a lot different, right? And they're up here, they're holding the bullish retest regen. Everything looks pretty positive there. If I look at the KRE, it's kind of the same thing. Still looks pretty positive on this time frame. Also looks positive on the month or weekly time frame. If I go and look at a broad swath of the financial sector outside of the U.S., all of them together, right? Again, looks very positive. And so I think what you're seeing, don't be dissuaded. My point here is don't be dissuaded by the XLF. That's pulling against the S&P pushing higher. But if you look at the broad financials, not just the large cap financials, they don't look nearly as bad as one would seem. As a matter of fact, if you throw in the global financials and look at it, they also don't look nearly as bad. I believe these look like, in my perspective, from a neoclassical perspective, they look to me like they're trying to set up a move higher, not lower. Finally, if we look at the fundamentals, right, we had all these things in September. If you remember, you had all the central banks, decisions that were made in Europe, so forth. None of those took the market down. We went down 3% on the S&P. All we have left now is OPEC. And so far, it looks like there may be some sort of a compromise potentially taking place there. And if it does, we may see OPEC shoot the oil markets up. And that would be a positive probably for the markets. The next things that are coming up are going to be these presidential debates and the election itself and earnings season. So fundamentally, I think that's where we have to be focused. Bottom line, last week, the market did better than we expected. I thought that what we might see is some more sideways type action where the S&P 500 itself got, well, actually, when I think about it, I'll pull up the chart here. When I think about it, it really did kind of do what we thought it would do last week, and that is it would hold, by the end of the week, it would hold within the bearish retest regen, which was here, right, and the bullish one, which is down, it was down in this area, the 20 area. And it did hold in there, but it did get over it, and I think that was better than we expected, right? It actually got and did the best that it could do. We actually saw the new highs made here. We also saw the Russell go up and make new highs. If I think about the coming week and what might happen there, I think the best case that the S&P just simply powers higher and actually starts to break over these swing point highs. I think that's the best you're going to see. Worst case, it fails and it actually drags the market lower. I don't think that's a high probability, but that's worst case. Likely case is that we kind of crawl up towards those swing point highs, and even though we don't get to them, we probably get into the bottoms of them. And so if I look at not this one, but I look at these other two, that's 2186, 2186 there. I think that's where we're probably going to see this market try to do. What's my best short-term idea this week? I think the IBB may give you a good opportunity tomorrow to take a position on the long side. And if Clinton stumbles on that debate Monday night, these guys might really shoot up. Longer term, I'm beginning to wonder about Robo. And let me show you what I'm looking at there. Now, robo is robotics, right? It's the ETF for the robotics. And if I look at these pushes, this looks to me like accumulation taking place at these price points. I mean, look at the volumes, all these volume bars to the top side, big ones, breaking over highs, lots of volume. If you go to the weekly just translated into a breakout as well. So you have it on the daily, you have it on the weekly. Here's the daily, here's the weekly, and you look like you're going to get it on the monthly. This month we end in 4 days. And so if this group holds up, you're going to have breakouts on all time frames. This group is starting to look really interesting. It might be a place we might want to put some money, and individually you might want to do the same. Long-term themes are here. I do update these weekly. You can glance at those if you want. Most of those still are playing out. One or two of them are kind of on the ropes, and it's hard. You know, one of the reasons I thought I'd leave that all year long and update it is it's really hard to know 6 months, 8 months in advance what's going to happen. You can look pretty good 3 to 4 months, but it's very hard to look at all, or look at the various scenarios that could happen all year long and actually play out. Very few people can do that, and almost nobody can do that realistically over a long period of time, be right. And so the point is, and the reason for showing that and keeping it all year long, is that if you think about the 3 time frames where you're thinking about the short, the intermediate, and the long, the one that's key is here. If you stay in sync with what's happening here, you're probably going to be where you need to be when you get out there. You don't have to predict this. It's not necessary. Just stay in tune for the most part on the intermediate and the short term if you can, and you'll be where you need to be on the long term. That's it for this week. Have a great one. I'll see you later.